Hey guys, welcome back to the channel. Very excited to shoot this for you because in today's video, we're going to be talking about the 5 most common mistakes that commercial loan agents make that you shouldn't, and hopefully you won't by watching this video. And if you don't know who I am, my name is Zevi Shaffer and I'm the owner of a company called Loanbrook. We're a residential and commercial lending shop in Los Angeles. And I'm also the creator of the Part-Time Commercial Lender Academy. So if at any time you want to learn about how to do any of this stuff, just check out a link in the description below. All right, and with that, let's jump into the video and get started because I want to talk to you about the 5 most common mistakes that commercial lenders make, starting with not understanding their clients. And that's true because 10 years ago, I was responsible for a team of people who were originating commercial loans all over the country. And during that time, what I realized very quickly is that most of the deals that were presented to me did not have half of the information that we needed to fully understand the client's needs. And I say that because it's so simple to just ask more questions. But what I find is that a lot of, especially new loan officers who get into the business, they're so nervous about making a mistake that they just don't do it. And so what happens is you present a transaction internally, and then when you start asking simple questions like, what is the purpose of the transaction? It may be a purchase, it may be a cash out. So what do they need the cash out for? Not really sure. What is the current value of the property? I don't know. What is the current debt against the property? Because you see, there's always caps to different things that you're able to do, certain parameters. How is the borrower's credit? Do they have any experience doing this, right? Do they own other real estate right now? How long ago did they buy it? What are they planning on doing with the money? Like all these really basic things that you would think are a no-brainer because it sounds super simple and a lot of people don't do it. So the biggest takeaway is that people just don't ask enough questions, and therefore they do not understand their borrower's needs, which often creates a frustration for the borrower. And you could lose the business to another loan officer who is in fact sitting the borrower down and going through everything. And what I would actually recommend for something like that is to have some kind of a checklist in place, because when you do, you will not forget to go through the journey of questions to get everything you need to be able to make a very informed decision when it comes down to what kind of a loan the borrower needs, how much, and so forth. And it's interesting because underwriters actually follow the same formula. So when you in fact submit a loan to a lender to underwrite, they have a checklist of items that they must go through. And before they hit every single one of those boxes, they don't finish the underwriting process. So that's when you get your conditional approval or your decline. Now let's move on to the next item, which is number 2, ignoring the power of networking. And the reason I say that is because a lot of lenders, again, especially in the beginning, get all bogged down about the paperwork. And they forget that more than 50% of the job is basically building relationships. And ironically, the more people you speak with, the more likely you are to open doors, and you never really know where those doors may lead you. You might say, yeah, but why would I talk to a banker if they do owner-user transactions? Because they don't do investment properties more than likely, or bridge loans, which are private money financing. And what if you build those relationships and you're a commercial lender and you do investment properties and you do offer bridge money from private investors, right? Hard money deals. So by just talking to more people and letting more people know in your immediate circle, here's the deal. People often ask me, yeah, but why do you think that they would send me the business? Because people typically work with individuals who they just feel comfortable with. Think about it. When you meet up with somebody, even for business, the conversation, unless you're signing contracts, typically shifts over to something personal within a few minutes. So the business side of it is very short-lived because people love to interact. They like stories. They want to know what you did over the weekend and what your family is up to. Stuff like that is a lot more interesting than sitting down talking about numbers. So as soon as you finalized whatever it is you're trying to do in terms of a loan, the conversation is going to shift. And when you're sitting with somebody who you enjoy being around, it's a lot easier. That's why most of the relationships you're going to build are going to be long-lasting, and those are the people that are going to be sending you business, all right? right? So hopefully that resonates with you. I want to talk about number 3, and that's not overcomplicating the transaction. Again, going back to my newbies, and even people that have been in the business for a while, they look at a transaction and they just get stunned with it completely. I mean, the borrower might have a lot going on, and depending on what type of a transaction it is, I mean, it could be an owner-user transaction where we're actually looking at income coming from the business to cash flow the deal. Could be an investment property where we're actually looking at income from tenants to be able to cash flow the asset. Could be a construction deal where we need X amount of money to finish the project and we want to know what is the project going to be worth, and we're only going to be able to lend up to a certain loan to the cost. Now, of course, it takes experience to understand all these moving pieces, but at the end of the day, once you've looked at a handful of them, you should be able to make a logical lending decision. Now, mind you, because you're not an underwriter, you don't have to make a credit decision. You just have to look at it and be like, yeah, this makes sense. I'm pretty confident that we could put this together and then do the handoff. But you do have to have a certain level of skill to be able to look at a transaction and say, okay, I can understand the moving pieces here. And at the end of the day, a lot of it comes down to common sense. So I'll use an example. Say that somebody's asking me for $1 million loan for their business because they're going to acquire another location. When I look at the first page of their tax return, which is also their profit and loss, if I see that their company is currently paying a certain amount of dollars for rent, and we're going to substitute that for a mortgage, and those payments are very similar, then it's very likely that they will qualify if there's still a profit after the income and expenses. All right, because just one of the line items would be the line item for the rent, as an example. Again, I'm just going back to common sense, not having to be somebody who is a CPA or knows, a whole lot about loans, but you could still use common sense to get you through a lot of different things. And then once you understand what it is that you have to package and move forward, so somebody else can take a closer look, maybe somebody with more experience. It's called a pre-flight before they give it a green light, so we can actually draft up something called a term sheet. All right, so that was number 3 on my list. Let's talk about number 4 for a minute, and that's all about marketing. A lot of people come into the business and they have no marketing plan in place. And let me tell you, today more than ever, marketing is so simple, whether you're doing transactions or not, simply because you have access to all the social platforms, and the only thing that costs you is your time. So you can literally research a topic on like an AI, like ChatGPT, if you just don't know how to do it or where to start, and basically regurgitate that information back to a social post and then sprinkle it on Facebook, TikTok, LinkedIn, Instagram. You get so much traction from people knowing who you are, and over time, you will build up credibility. I'm sure over time, you'll get looks and opportunities to work with people who are more experienced than you, who would be able to actually share their knowledge to kind of bring you up to speed. But to be able to get these opportunities, you have to be able to get in front of people. And the quickest way to do that today is on social media. Next time you're anywhere, take a look around you and just notice how many people are actually on their cell phones. It's crazy. Everyone around you, whether you're in a restaurant or outside on the street, I mean everywhere. People are literally glued to their phones. So why don't you be one of those posts that pops up if they're into that topic of trying to figure out commercial lending or get a loan, whatever it may be. Your post could be popping up across millions of devices. I know you don't think about it like that, but that is the absolute truth, all right? Which leads us into number 5, which is a lot of people keep their level of education very, very low, and therefore their skill level also remains very low, which is why I have created the Part-Time Commercial Lender Academy. I literally took 10 years worth of my knowledge in commercial lending and I packaged it into a very easy to follow roadmap, and it's available for you via link in the description of this video. You could literally go through it, learn, everything there is to know about putting together a commercial lending transaction for yourself and a client, obviously, so you can get paid a commission on it. And if you're wondering, what about the forms? What about all the work that goes into it? It's all inclusive. I've literally taken 10 years worth of work, including all my forms that I've gathered and created through those 10 years, proprietary work, and I plugged it into the academy. So hopefully that helps you out. If you're interested, feel free to check it out, all right? Otherwise, those are 5 things that you could take from this video. And if you're thinking about getting involved in commercial lending, it's an amazing thing to know, even if it's just something that you want to do part-time. And the reason I say that is because if you think about this logically for a moment, an average residential loan amount, depending on where you are in the country, is nowhere near financing a building, even if it's for mom and pop, for them literally just to move into a new location. My guess is it's at least 5 or 10 times greater than a typical residential loan. And when you're the one who's in charge of originating that loan for that customer, again, you're not dealing here with selling sunset clientele. It's just a mom and pop shop. You could still earn that same level of commission. And even if you did that a couple times a year, it would make a significant difference in the amount of money that you make, all right? So hopefully that's a great takeaway. If you have any questions for me, we covered quite a lot in this video. I would love to hear from you. Just drop me a comment in the comments. Let me know what it is. If you have a question, I'll be happy to answer it. If you got any value from this video, please give it a thumbs up, simply because it helps other people like yourself who are trying to find this information on YouTube. Just makes it a lot easier to find, all right? I appreciate you guys being here. Thank you for watching this, and I'll catch you again on my next video. Take care.